talking about something that's we can't stop, we can't get away from, and that is for our CARES Act, which is, most of you might have heard that it's over a 900-page document. It took so long for our legislators as well as all of our bankers to make sense of everything and understand everything, and all the deadlines were coming up to introduce all of the new information. So it's been quite an information overload. And we're thrilled today to have a representative from the U.S. Chamber who has gotten lots of training from the Small Business Administration. And Ryan is a manager of Congressional and Public Affairs for the United States Chamber. And he represents the Great Lakes region that encompasses Illinois, Indiana, Michigan, Ohio, and Kentucky. And prior to working with the Chamber, Ryan worked for a government affairs firm, working with clients on the broad range of issues like taxation, banking issues, financial services, and issues in all 50 states and in the federal government. Ryan's a graduate of Illinois at Urbana-Champaign, and he double majored in economics and political science, and he currently resides in Chicago. And at this time, I welcome Ryan Gleason. And Ryan, you could take it away.
Thank you, Janet, and good morning. Thank you all for joining me on this conference call today. So today, I want to kind of give you what's going on with the CARES Act that was signed into law by President Trump 2 Fridays ago, which feels like a couple of years ago now. So I just want to give you an idea of scale. The CARES Act is a $2 trillion package. It's just under 10% of our regular GDP in our country. This package is designed to be robust because the idea that this is a bridge that helps us avoid a prolonged recession and downturn. And it will allow us, once regular commerce can begin resuming, to move back to normal commerce. So in addition to the $2 trillion in face value of the package, some of the funds can be used by the Federal Reserve and can be leveraged to provide an additional $4 trillion in support of the economy. So today we'll talk about the individual provisions, perhaps the most important automatic payments that the federal government is making to individual taxpayers. They're beginning the process of direct depositing these funds to taxpayers across the country. The amount is $1,200 per individual, $2,400 for joint returns, plus $500 per child. And it begins to phase out for incomes above $75,000 for individuals or $150,000 in joint income. So as we already saw last week, the devastating numbers of 6.6 million people filing for unemployment, which was a record by far, and that beat the prior week's record of about 3.3 million. So as much as we support business, we're going to have to rise in unemployment almost irrespective. And so this will include some fairly robust expansions of unemployment benefits. Most importantly, restrictions on eligibility for unemployment. Remember, if you go through unemployment, applying for assistance, there are these qualifications about how long you've been employed, how long you have to wait, etc. These eligibility requirements have been amended as it's related to the coronavirus. So in addition, the federal government is providing an additional $600 on top of the regular state benefit through July 31st. States like Ohio simply have to agree to accept this additional benefit for the residents, which Governor DeWine has. A lot of questions have come up about whether or not individuals will remain on unemployment, particularly given the enhanced benefit. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work and they choose not to work, then their individual eligibility ends. So how do you access this? You still go through this Ohio State Unemployment Office. You don't go to the federal government. You go to your state unemployment office. So nothing changes in that respect. So let's talk about some of the major provisions for employers. There's kind of three groups that this is broken down into. The CARES Act does. There are provisions that are available for all employers. There are provisions available for larger employers, and then there's provisions available for small business, the self-employed, independent contractors, and nonprofits. And that latter half is where we'll spend the bulk of our time this morning. So let's start off with the provisions available to all employers. There's a payroll tax provision for all employers who payroll taxes. So think about it like this. Everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering the payroll taxes for both the employee and employer side. Under this bill, an employer may choose to delay their payment of their portion of payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st, 2021. If they choose to delay that, they have to pay 50% of the accumulated amounts they would have owed by December 31st, 2021, and then the remaining 50% on December 31st, 2022. There's an important caveat here. This is generally available to all employers except if you had a loan forgiven under the Paycheck Protection Program. This is a small business loan program that I'll be discussing in a little bit here. You'll hear me reference quite often. So other tax changes that are important, net operating losses, or NOLs. If you have a business who has an operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded from 2018, 2019, and 2020 and can generally be carried back 5 years. This also applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits. You can accelerate the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments in their property, they can accelerate the recovery of that as well. So all of these provisions are really centered around one idea. It's improving liquidity for employers. At the moment, when employers don't have any revenue coming in, it's really hard to pay the bills. So these provisions give employers greater access to liquidity. So it's not so much about reducing overall taxes as it is timing, giving employers more access to the cash they have today to be able to pay their employees. Okay, so there's another provision that's available to all employers, and it's called the Employee Retention Credit. Now, this is a late add to the bill. The early draft did not include this provision, so you haven't really seen a lot of attention paid to it. The retention credit generally applies to employers. We're talking about businesses, but also nonprofits, for example, who have fully or partially shut down as a result of the coronavirus, or a 50% drop in their gross receipts in a quarter. They're eligible for this credit until their gross receipts get back up to 80% of their prior year's amounts. So think about it like this. This is designed to help employers who shut down or lost revenue, but who continue to pay employees. So how much is the tax credit worth? It's worth 50% of the wages paid by the employer, up to $10,000 per employee. And I want to be very clear here, this is a fully refundable tax credit. So think about it as a $5,000 tax credit available to the employer. But there are special rules for employers with more than 100 employees and employers with less than 100 employees. First, if you have more than 100 employees, this benefit only applies to the employees who you are paying but are not providing services. So think about it this way: your business is shut down, you've had a drop in revenue, your employee's not working, they're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you paid them. Second, if you have 100 or less employees, the requirement that they not be providing services does not apply. It's available to all the employees you paid during the eligible period. The eligible period being when you're shut down or when you've had a quarter drop with this drop of gross receipts relative to the prior year. So importantly, again here, the Paycheck Protection Program, which again I will get into here shortly, that Small Business Loan Grant Program. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the Employee Retention Credit. We understand that employers may have cash flow problems, and one of the things employers who take advantage of this is that we are seeing the Treasury beginning to provide guidance that will allow employers to get in advance of the payment of the credit, which will help them pay their employees today. All right, so let's talk about some of the options for mid-size and larger employers. The bill in total, $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. Federal Reserve credit facilities, you may have read about them in the paper. These are things the Federal Reserve is creating, for example, to support commercial paper, money market funds. They do this as a regular course of business when we have a financial crisis. They are used robustly, for example, in 2008. $454 billion of that 500 is for businesses at large. There are special programs for the airline industry and critical national security businesses that make up the remainder of that 454 to 500. So the Federal Reserve is issuing more guidance about these credit facilities and beginning to launch them, including terms and conditions. Remember, this is not going to be a situation where most likely where a company goes directly to the Treasury Department or Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the United States for them to make more loans available. There are some restrictions to go along with this exchange for expecting the benefit that includes stock buybacks by the company as long as their loans pending for an additional year, and limits on increasing executive compensation. Okay, so now kind of for the rest here where we'll spend the bulk of our time is on the small businesses, self-employed, independent contractors, and nonprofits. So the provision that's getting the most amount of attention that I've alluded to is called the Paycheck Protection Program. Some other financial institutions are calling it the Paycheck Protection Loan. They are the same thing, but the official name as described by the Small Business Administration is the Paycheck Protection Program. It's a $349 billion in loans for small businesses. That's generally defined as employers with less than 500 employees, the 501c3s, the self-employed, sole proprietors, and independent contractors. So a way about thinking about this is if your business is generally qualified for an SBA program, you're going to qualify under this program. In addition to that, some employers, some businesses who would not qualify have been added to that list. That list includes independent contractors and the self-employed. So it also includes restaurants and hotel folks who might otherwise be ineligible because if you add up their locations, they have more than 500 employees. Under this bill, it says we're going to judge you in the accommodation and food service business as a per location basis. So don't automatically assume because you're not eligible for a regular SBA program that you're not eligible for the Paycheck Protection Program. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate your average monthly payroll. And once that's calculated, you multiply it by 2.5, except the loan cannot exceed $10 million. So where will you be able to get the loan? A lot of folks are saying, do I go to the Small Business Administration, the SBA? We do not expect that folks will go to the SBA to get these loans. Instead, you're likely to go to your local and national lenders. And just to name them, there's lenders who are already SBA 7A lenders. As they participate in the SBA 7A program, they're automatically qualified to provide these loans. In addition, the Treasury Secretary designated all FDIC-backed banks and credit unions to also provide these loans. So there's a generous amount of designation of other lenders, in part because this is such a generous loan program. It's 100% backed by the federal government. There are very minimal requirements as far as underwriting these loans. There are no collaterals required. There's no personal guarantee required. And there's really a unique feature of these loans is that the loans can convert into grants based off what the borrower spends. Again, that's kind of trying to avoid the term paycheck protection loan because these ultimately can be converted into grants. So the way that the bill is laid out, it looks at 8 weeks of your expenses after the date of the origination of the loan. You get to tally up everything that you spent on payroll, that you spent on rent for business, interest on mortgages tied to businesses, and what you spent on utilities. And you can get dollar for dollar forgiveness up to the loan amount that you were allocated. So again, that was rent spent on business, interest on mortgages tied to businesses, payroll, most importantly, utilities spent on your business. And again, your forgiveness cannot exceed the amount that you actually borrowed. There are some conditions, however. Your loan forgiveness is reduced proportionately if you reduce the number of full-time employees you had relative to a benchmark period, either the year before or the first 2 months of this year. The loan forgiveness is also reduced if you reduce the wages of employees making less than $100,000 by more than 25%. That's a good note about the wages above $100,000 though. In your calculation of payroll expenses, you get to count the first $100,000 that you might have paid as an employee, but nothing beyond that. So this is really targeted at middle income earners. Employers can also avoid a reduction in the forgiveness because we know a lot of employers had to lay people off. If they bring back employees and restore their wages, generally within 30 days, and maintain those employees and maintain those wages through June 30th. So a way about thinking about it is what the government is incentivizing is it wants to give money through small businesses, money to keep paying their employees. So we're often getting asked, what if a business is shut down or you happen to be in an area where, Governor DeWine has said essential business can't open? That doesn't matter for this purpose. What this loan is looking at primarily were you paying your employees. Remember, the goal of lawmakers in creating this program was to provide assistance essentially in the form of grants to provide small businesses, and encourage those small businesses to keep paying their employees. So you can learn more about this program, which I will send to Janet after this is over. The Chamber released a 4-step guide to help you prepare for applying for one of these loans. This guide goes through in detail who is eligible, how you calculate your average monthly payroll costs, what your lender might be looking for when you show up to apply for a loan, in addition to how your forgiveness can be calculated. I know a number of businesses personally that have used this guide, and they found it to be very easy to kind of go through and answer really any questions you have when going through this PPP program. So one of the things the U.S. Chamber is doing is we're encouraging small businesses to really understand whether they're eligible for this PPP, and think about what your loan forgiveness might look like in the situation on the back end as you make a decision as to whether or not to apply for one of these loans/grants. All right, on another provision that benefits small businesses, the self-employed, independent contractors, and nonprofits is the SBA Economic Injury Disaster Loans, known as EIDL loans, EIDL loans. EIDL loans have been around for a long time. If you've happened to have been affected, let's say by a tornado or some other natural disaster, you might have applied for and received an EIDL loan. So who is eligible? Small businesses, again, nonprofits, including faith-based. There are no restrictions on the type of nonprofits for the EIDL loan. It's any entity that nonprofit has fewer than 500 employees. And again, here, sole proprietors and independent contractors. So this is an actual loan. This is not a loan that in general that converts into a grant, like the PPP. You can borrow up to $2 million in working capital that's repaid over 30 years. And the interest rates are 3.75% for profits and 2.75% for nonprofits. If you take out this loan, payments are deferred up to a year, so you don't have to immediately start paying back on this loan. They made it easier for individual businesses to apply as well. Your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. You can get up to $200,000 without personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's a general security interest, or sometimes it's secured with real estate, but they're trying to move away from real estate in this particular instance. There's an important feature that's kind of brand new as a result of the CARES Act. If you're applying for an EIDL loan, one of these injury disaster loans, you can request to be provided an emergency grant, which they have to make a decision on within up to 3 days of up to $10,000. The bill details what you may use the grant for, but there is no requirement. The $10,000 grant does not have to be repaid even if you're denied the loan. So you apply for the EIDL loan, you get the emergency grant, you request an emergency grant, you receive it, then you're denied the loan. You still do not have to pay back the $10,000. You should essentially think about this as an emergency grant for small businesses. There are some important interactions with the Paycheck Protection Program that we talked about a little earlier. Importantly, for example, if you end up with both, you generally end up with both because you've already gotten an EIDL loan since they've been around for a while. And maybe now that the protection laws are being set up for those of you applying, you can roll them together, but you can't get the double forgiveness on the $10,000 grant from the EIDL. That would come off the Paycheck Protection Program's forgiveness. There's also some requirements with respect to paycheck protection loans that you can't double dip. In other words, if you take out the two loans to pay, you can't take out both the EIDL and do PPP to pay the same bills. So if you're thinking about both of these, you're going to want to think about those restrictions. So don't assume you can do all these programs and just stack them up. What they've done is they've made the Paycheck Protection Program the most favorable, then tacked on other programs that don't avail themselves to the Paycheck Protection Loan, and that includes the EIDL loan. So you don't apply for the EIDL loan by going to your local bank. You apply this on the Small Business Administration's website at sba.gov. This is the one where chambers and other 501c6s can also apply for. Chambers can also receive the employee retention credit but they have to be substantially shut down or reduction in revenue relative to the prior period. So you want to think about that with your folks that do your taxes. Okay, so now with respect to small businesses, there were some provisions that received a lot of questions that don't necessarily come from the CARES Act. They come from the Family First Act, which was the prior bill, often called the Phase 2 bill. So what the Phase 2 bill included was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to their employees if it's related to coronavirus. As you've probably seen. Sick leave is taken when you're ill and when you're quarantined, or you need to take care of a family member who is quarantined, or you're taking care of a child because of school or daycare closures, which we've been seeing. Leave is paid at your regular rate, but it's the maximum of $511 a day. Unless you're taking care of a family member, then it's 2/3 the regular rate with a maximum of $200 per day. Importantly, the federal government will this is critical, that the federal government will reimburse the employer 100% of these costs up to the daily maximum that you pay your employees. This is a refundable tax credit, and understanding that businesses often have liquidity problems as well. The Treasury Department is taking steps to allow businesses to request in advance on that refundable credit, so you have the resource to pay your employees who are taking sick leave. This is in addition to what the employer already provides, including what you provide pursuant to state and local law. There's a lot of talk about businesses with less than 50 employees being exempt. The law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose core daycare is closed, and only to the extent of providing leave threatens the viability of business. If you think this applies to you, should check out the Department of Labor's guidelines. They're posting on their website at labor.gov where they explain this further. Finally, paid sick leave is generally not available for an employee where they can telework. That only applies if the employee is taken care of, for example, a child, and they can also telework by staggering or changing their hours. Okay, coming kind of in the last section here, the Phase 2 bill included a paid family leave, or FMLA. For those not familiar with this, it's the Family Medical Leave Act. It's a law that generally allows for 12 weeks of unpaid leave. So what the Phase 2 bill did say was that employers with less than 500 employees are required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to school or child care closure caused by the coronavirus. That's the only reason for extended leave. So when you think about the interaction between the FMLA and sick leave, an employee would probably take 10 days of sick leave first and then be eligible for 10 weeks of paid leave. Here, the leave is paid at 2/3 the regular rate, a maximum of $200 per day, $10,000 in the aggregate. It's in addition to what you already provided under state and local law. And again, it's fully reimbursed the same way by the federal government. There are similar exemptions for employers with less than 50 employees, same as the paid sick leave. And again, it does not apply to an employee who can telework. So in conclusion, how can you get more information about this? Well, uschamber.com has a lot of resources, including bill summaries, in particular with our small business friends called CO. The CO from the U.S. Chamber has several tips and guides that are available for small business. That website is uschamber.com/CO. And then we also do have a good resource for the Paycheck Protection Program that I'll provide Janet. But if you want to write it down, it's uschamber.com/SB loans. And with that, Janet, I'll turn it back over to you and field any questions that any of your members may have.
Wonderful. I can unmute people if they would like to have a little bit of time to ask questions. Feel free to do that. I'm working on unmuting now. Hopefully you can go ahead and start asking a question.
Hi, can you hear me?
Yes, we sure can.
Okay, I have a quick question. And what do you do in regards to the Paycheck Protection Program if you're a seasonal employer? How do you calculate payroll that way?
So that's a good question. We've had that come up a number of times. So the guide that I hope, Janet, you'll be able to share does include ways for seasonal employers to be paid. So for seasonal employers, your maximum loan will be 2.5 times the average total monthly payments for payroll costs for the 12-week period beginning February 15th of 2019 or March 1 of 2019, which is decided by the loan recipient, and ending June 30th, 2019. So payments deferred are deferred for 6 months. There's a 0.50 fixed interest rate, and the loan is due in 2 years.
Okay.
And again, there is a guide that hopefully Janet will be able to share that describes in detail for seasonal employers and non-seasonal employers how much you can borrow and your payroll costs.
Okay. And Janet, you're going to share that. How are you going to? Is that going to be like an email, or how will we get
Yes,
that?
our plan is to send out via email. Yes, and if for some reason you didn't register through the chamber website, my email address, everyone, is jdavis@westervillechamber.com. So anytime if you don't get it, you can email me to make sure. But anyone that registered through that database, we have you and we'll send it out.
Okay, fantastic. Thank you very much.
Sure. Other questions?
Yeah, I have a quick question. Can you hear me?
Okay.
Yep.
Yeah, so I understand that you can get both the PPP and the EIDL, but you said you can't use them for the same purpose. Are you able to get both? And I know within the EIDL, there's a $10,000 grant. Are you able to get both and have both forgiven if you use them for separate purposes?
No. So if you receive the $10,000 grant, it is automatically forgiven through the EIDL loan. You don't have to worry about paying it. It just takes $10,000 off your cap of the Paycheck Protection Program. It's important to note that the EIDL loans the Paycheck Protection Program runs through June 30th. EIDL loans, however, run throughout the rest of this calendar year.
So they're available to go get them or to apply for them that long a period?
Correct.
Wow.
So I have another quick question to kind of follow up on that. So if somebody was to apply for a PPP loan, Paycheck Protection, easy for me to say, right? If somebody were to apply for a PPP like now, could they then apply for an EIDL loan, say like in July, but not like a $10,000 grant one, but like maybe one for $500,000? Could they get both of them at that point if you got a PPP now and then waited a couple months to apply for an EIDL loan?
Yes, you could. However, when you would be going, presumably you would be paying, for the PPP, you would be paying for utilities, payroll, etc. You couldn't spend them both in the same area.
Well, what if you were using the PPP money to pay for like stuff for, let's say, the month of May and June, and then you applied for an EIDL loan in July, and you were going to use that money to pay for stuff like July, August, September, that kind of thing. Would that be allowed to do both of them then?
Yes, because the PPP program would have ended by June 30th.
Right. Okay. So there's no restrictions then to do something like that. Okay.
Correct.
Okay. Fantastic.
Where can I find good information on how self-employed people are supposed to calculate their income and apply for the PPP loans?
It's a really good question. Again, in this guide, you will be able to calculate based on it very clearly lays out for sole proprietors and those that are self-employed as well.
Right. Thank you.
Because so for sole proprietors or sole proprietors rather, and self-employed as you kind of described, the sum of payments of any compensation to or income of a sole proprietor is that, you know, wage, commission, income, net earnings from self-employment. It just cannot be more than $100,000.
I'm sorry, more than 10,000 or 100,000?
$100,000.
Makes sense.
Janet, can you hear me?
Yes, we sure can.
I had a question regarding a S corp, and the owner could the salary figure also include the sub-S insurance and the benefits that are part of that person's payroll figures?
Yeah, so for all of that, the payroll cost that is included are salary, wage, commission, payment of vacation, parental, family, medical, and sick leave. There's an allowance for dismissal or separation. There's payment required for provisions of group health care benefits, including insurance premiums, payment of any retirement benefit, and payment of state and local tax assessed on the compensation of the employee. So all of it is included.
Okay, and then the reimbursement or the forgiveness amount can be affected by the change of full-time employees, but up front, when you're applying for the amount, is it include both full-time and part-time salary figures? I assume so.
That is a good question. So the 500 employee threshold includes all employees. So yeah, it includes all full-time, part-time, or any other status.
Okay, thank you.
Independent contractors, though, I would like to note, are not included as employees, and independent contractors are encouraged to apply for this program themselves.
Other questions from the group? Ryan, when you apply for the EIDL loan for the $10,000, which can be viewed as a grant, do you have to apply for a loan as well, or can you just apply for the $10,000?
This I'll have to get back on you because I've heard conflicting things, and I've looked at the EIDL loan myself and trying to apply just for interest. I believe you do have to apply for a loan. I think the loan is discretionary, but then after applying, you can request a grant for immediate liquidity.
Oh, okay. Other questions for the group? Well, hearing none, I will begin to close out. If anybody has one, just stop me. Ryan, we really appreciate your time and sharing your expertise and the knowledge, and we will get the handouts that he has referenced, and I will work on getting those to everyone today. And again, if you just had signed up coming through Facebook and I may not have your email address, please email me at jdavis@westervillechamber.com and I will get the documents to you. Any other final comments from you, Ryan?
No, that's it. I really appreciate everyone's time this morning. I know it's difficult, but I am hearing, I know that a number of businesses had a tough rollout with their local banks, but I'm starting to hear of success stories. So, there is help out there.
Well, that's good. I'm glad you're hearing success because we have heard that some people were delayed or the banks weren't doing it yet. So it sounds like things are opening up. And everyone,
And
we do
Janet, I
have,
am sending
yes.
you right now.
Okay,
So I just sent you all the information.
wonderful. Future coffee conversations, everyone. We'll have one on Thursday at 11 a.m. Becoming resilient during times of adversity. We also offered that today as well. And you'll be hearing other ones are posted for next week and all the way through April on Tuesday and Thursdays. Have a wonderful day, everyone, and stay healthy. Thank you.
Thank you.
Thank you.
Thank you.